What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is August 11th of 2022. Let's dive into every dirty detail of today's PPI report and its impact on the markets. There's a lot to dig into. So let's start off. We're going to go through our box scores, but first, before we do that, let's set the table. U.S. producer prices fall for the first time in over 2 years. Producer prices in the United States unexpectedly fell 0.5% month over month in July, following a downwardly revised 1% rise in June and beating the market forecast of a 0.2% increase. It's the first decline in the PPI in over 2 years, mostly due to a 16.7% drop in gasoline prices. So that's good news, right? So we ended up getting another massive gap higher in the markets. But look at where we ended up, team. The S&P 500 closed up 0.07% as measured by the SPY. NASDAQ QQQ actually finished down 0.57%. Our IWM small caps finished up 0.47%. And I actually shorted the top in the small caps, funny enough, almost to the T intraday. Pretty crazy stuff. And the Dow Jones was up 0.15%. ARK Innovation ETF was down 3.2%. Now you would think if we got this really good inflation report, shouldn't the ARK Innovation ETF be ripping higher? Shouldn't that be leading the market? And my best interpretation here is that markets are so efficient. The smart money, they see this stuff coming a mile away. The inflation deceleration has been priced in for a couple months now. Like, why did we get this rally from May into August? It's likely because investors could see this coming. And by the time we got to the PPI report, crazy enough, now we have some players that are selling that news and or looking forward to the next inflation reports. Pretty much all of these indices closed towards the low end of their day's range. We did have a small pickup in volatility, nothing major. And you can see breadth did finish out pretty mixed, but we had 61% advancers in the small caps. And overall, we did have 63.1% of volume. And the trend model does remain at a +1. So pretty ambiguous, right? Finviz heat map, we can see that Tesla took a relative loss today, down 2.63%. You can see some of these other mega cap tech monopolies also were down on the session. Healthcare stocks, we saw some profit taking, and energy stocks were our big winner. So funny enough, the day that we get this big deceleration in inflation, energy stocks are ripping to the upside. In terms of sectors, we had solar energy, which is in our top momentum slot, actually pulled back today, down 2.44%. And a lot of the other top momentum areas in the market, like fintech, pulled back almost 3%. Biotech pulled back over 3%. Blockchain assets still eked out a gain. They were up 0.17%. And you can see, other than that, it was pretty mixed across the board. Funny enough, the best performers were the XLE Energy ETF, up 3.44%. And the KWEB Chinese Technology ETF was up 2.75%. In terms of style factors, we did have another mixed board. The growth style factor finished down and was our biggest loser. Biggest gainer was the high div low vol group, up 0.85%. So that really just goes to show that some of these investors, they did move back to a more defensive posture. Now let's take a look at the indices, and we'll also dig into some of my trades as well. S&P 500, look at this gap. This gap higher, market moved up, and it was just a breakaway. It was like, oh my gosh, we're already hitting like 4260 on the S&P 500. Just a monster move. But then we really came back to reality, and there was some distribution off the open. One of the big tells that something was a little bit off this morning, and that actually got me to take off a lot of the risk that I had on in my portfolio. 10-year Treasury futures, look at what's happening here. So these actually broke down today. And if investors were cheering like, oh my gosh, we've beaten the inflation monster, it's all over, good things ahead, I don't think we would see treasuries breaking down like this. And really the entire rally that we've had off the lows has been predicated by these 10-year Treasury futures rallying and bond yields coming in. So the fact that we're starting to see this trend flip, that's not really a good thing. We can see if you zoom back out, it's like this region, this is the beginning of the year. Look at the path these 10-year Treasury futures were on, and it was a freight train of risk for asset markets. So now that we're starting to see like the very beginnings of treasuries spilling over, that's a freight train of risk that I don't want to be the one stepping out in front of, especially when we just had such a fantastic rally in the markets and we took advantage of that rally. So like, someone else can be the first one to be like buying the dip on all this stuff. After the S&P 500's up like 12% off the lows, NASDAQ is up 20, like Russell 2000's up a gajillion. I'm not going to be that guy that's stepping out and like just picking the bottom of something that, is really just starting to have the look of topping out. So we'll have to see. This is definitely something to keep on your screens. Definitely monitor these 10-year treasury futures. And let's pull up the 30-year treasury futures as well. We can see, the 30-year treasury futures had an even worse day. This is just a bad candle. So there's nothing wrong with just being like, hey, let's wait and see how this shakes out a little bit. Let's look at the other indices. NASDAQ put in a slightly red candle, definitely seeing the distribution here. So you have to ask yourself, like, are the A players buying in after this news that everyone's been pricing in for the last 2.5 months? Probably not. It's probably people that, forced buyers, capitulatory bears that are now flipping bullish, that sort of thing. Russell 2000, we did hit this virgin points of control that was established in April, and that is where I took a short position in the Russell 2000. So let's go over to my trades for today and let's check it out. I did a bunch of stuff. We'll just go over the highlights. But today was a pretty good trading day for Pristine Capital members. Let's take a look. Display settings. Let's swap this view. So I closed out the remaining 50% of our DigitalOcean position. This was at 946. Closed this out for $51.89. We had paid $48.15. And this was when everything was ripping to the upside. A lot of these growth stocks were just going crazy parabolic in the morning. And I was like, you know what? This is such a good day. Like, we got to put something in the pocket. So I just sold that one, pretty aggressively in the morning. Then Hut 8 Mining. Oh my gosh. Hut 8 Mining had a fantastic morning. So all I did here was I sold the August 19th 4-strike calls, which is like 40% higher than where it's currently trading. They expire in a week, 40% higher in a week. Sold those off for 8 cents. And I was able to reduce the cost basis on our Hut 8 Mining position from $2.44 to $2.36. Doesn't seem like a lot, right? Just an 8-cent cost basis reduction, but it really adds up over time. And for me, I was like, you know what? This is my biggest position. Why don't I sell some call options against it, bring in some premium? If it ends up getting to $4 and gets all the way up to $4.08, then, whatever. I'm glad to sell off the position. That would be a fantastic move in a week. And then I did buy some Toast common shares in the after hours. Let's take a look at Hut 8 Mining and what happened there. Hut 8 Mining did report earnings this morning, and the earnings were pretty good. Honestly, these crypto miners, they don't really even move off the earnings. But yeah, you can see this stock was up. At one point, it was up at $3.32. Now, for this name, my target is this virgin point of control up here at $4.13. So normally I would be selling some of this, right? Because it is pretty extended. And look at the candle we put in, a sell-off candle on high volume. But for this one, I really want to see if I can play it for the bigger move. So that's why I sold the 4-strike calls. Hey, if it gets up there, that's pretty much right at my target anyway. So we'll see what happens. But yeah, Hut 8 Mining still looks fantastic. But it probably needs to pull back a little bit, reset, consolidate, whatever you want to call it. Because that was just a crazy move. Some other stocks that were just moving like gangbusters today. Like, look at the candle Roblox put in. At one point, this stock was up like 12%. And the top was sold in this thing. A lot of other names, very similar. What did Upstart do? Oh my gosh, this stock. Okay, this one not as much. But like, for instance, some of the guys in our group are trading Beam. Yeah, Beam did a very similar thing. Look at this, like up huge, and then just retraced a lot of the gains. Can these stocks, just reset and power higher? They certainly could, but it really just, shows there was definitely some selling today. This is really what caught me off guard in the morning, or not caught me off guard, but really put me on guard. Enphase and these solar stocks, we just saw some big selling. So there's, it's not really risk on when you see like the most highly coveted areas of the market that are selling off on high volume. The solar energy ETF, look at this thing, put in like a bearish outside reversal candle. Look at DigitalOcean. Yeah, this is the one that I sold. So I sold this one off for like $51 and change, as you saw earlier. Look at the candle this one put in. If I had just held on to that, I would actually be negative on the position. So, sometimes it helps. You see something going on in the fixed income market and you go, hey, like, let me sell this thing. The one trade that I did add, I added Toast in the after hours. And Toast, take a look at the earnings. This is one of my favorite trading setups. Trading companies after they report a really strong earnings print. And Toast did just that. Put up some really good numbers. And you can see this is in our Discord. And there's one thing, we're actually saving up. If we get a few more members in the group, we're going to be getting a new data set. And it's going to give us KPIs for all these companies. And we're building out a really good strategy for trading earnings. We'll talk about it another time, but that is really like the next goal for the group. So let's see, where is it here? Let's go to our earnings channel. This is the market analysis channel. I'm posting in this throughout the day. And like, for instance, like this is, in the morning, this here, like the 10-year treasuries, they're selling off while the equities scream higher. This was a really good thing. This was from someone else on FinTwit. But look at this, the Naeem Money Manager positioning is out. This is something that I cover every week in our Pristine Capital Weekend Market Analysis video. But look at this, in June, this is how active equity managers are positioned in the market. We had a rating of 32.18, meaning these active equity managers, they're really not invested in the market. And the reading just came out for August 10th. It was at 71.59. So that means like pretty much everyone's back in the pool in terms of the markets. But anyway, let's go to our earnings channel and let's take a look at the numbers that Toast put up. Yeah, so Toast, they see Q3 sales of 700 million to 730 million versus an estimate of 665 million. And they actually raised their fiscal year 2022 sales guidance just a smidge, nothing too crazy. So this one I actually bought in the after hours. We'll see though, if this becomes a market that's a little bit less friendly, this power earnings gap setup might not actually work. But I put this trade on for $20.01 in the after hours. Right now it's at $20.20. So we'll see how that one does tomorrow. And then in terms of options trades, also did a lot of selling. And I actually had, this is like one of my best trades that I've done so far this year, I would say. So check this out. These are our options trades. And I got to do this more. Like every time I post a trade, I really should be posting the chart. Because if you're just at work or whatever and you get the alert, say you're not at the desk, like rather than having to look at the chart, I should be like posting that in there for you. But anyway, so JKS, I closed out half my position at 10.09 for $10. I'd paid $10.20. And I wrote here, I got a bit excited and sized this trade bigger than I should have yesterday. We'll still benefit if JKS advances with this reduced size. And that was, probably made a mistake sizing that one too big. Closed it off for a 20-cent loser, so very, very tiny. And then I closed the remaining half of it a little bit later at 11:37 as I started seeing that treasury weakness. I closed it out for 10.25. I'd paid 10.20. So overall, the trade was maybe like a 10-cent loser, very small scratch. This is another one that ended up sinking by the end of the day. So I'm glad that I did that. But then here's what I did. I got long these small cap August 19th 199 strike puts for $2.79. And I scalped this. I figured, hey, small caps are so extended. We're getting up to this virgin point of control. We're taking it out. Why not put a short trade on? You'll see this was a 2-star trade. So I went a little bit bigger on the size than some of my other trades I've been putting on recently. And I ended up closing out some of the trade for $3.42. Closed out some for $4. And I had paid $2.79. Then I closed out the remaining piece of it for $3.90. So this really just like buoyed my portfolio. I did a lot of selling and then also added some put options and actually shorted the market intraday. So it ended up being, just a pretty fantastic sequence. And then my DQ October 70 strike calls, I closed those out for $9.70. I'd paid $6.70. So that was like a 43% winner. And I just figured like, if the market is so volatile, or not volatile, but like treasuries are coming undone, the rally's like super extended, investors are selling into the strong PPI report. If I have a 43% winner on an options position, why am I not booking that? You know what I'm saying? So like that's something where I've evolved over time and just becoming more risk conscious. See, I took off that DQ trade. I actually got long some VIX November 16th, 25 strike calls for 450. And I wrote here, this trade is sized very small, so I can actually use it as a hedge. I don't have to worry if it goes to zero. I think that's one of the pitfalls a lot of investors fall into, where like if they want to put on a hedge, they size it way too big and it becomes like a speculative short position. And a hedge should really just be a hedge. So to be honest, like it shouldn't be sized like incredibly big or be too speculative, because then you're not going to be able to manage the hedge properly. And then take a look, this is our VIX. So this is why I bought those VIX call options. Let's go to the weekly chart. I bought them for November. So you'll notice like the VIX, there's like this mean reversionary aspect to it, where there's declines and you get a spike, decline, spike, decline, spike, like over and over and over again. And look at the sequence that we've just had. It's basically been like a straight line down for the VIX. So I figured, hey, what happens maybe in September, we get a correction. And if you look at the seasonality, things do get rocky in September. You can see there's a big seasonal bump in September, but then a lot of times there's a correction as you head into October. So I figured, hey, why not? I bought those November VIX calls. Heading into tomorrow, just to put this on your radar, here are the earnings that we have coming up. We have, these all happened after the bell. And remember, Toast was the one that I traded. But then on Friday before the open, one that I'm gonna be looking for, Beam, of course. And then Pure Cycle, this is a clean energy stock. It just had a news catalyst after the bell. Oh yeah, and this is the champion's vow. I just always include this in the slide deck. This is me just saying I'm never gonna allow a stock to move greater than 8% against me for the rest of my life. That's a vow that I made, put that out to the ether of FinTwit, and I'm gonna keep that vow. I'm never gonna take a loss bigger than that for the rest of my life. But yeah, take a look. We have this PCT. I'm gonna leave you off with this. This one I believe had like a positive news catalyst, and I gotta dig a little bit further into it. But it's a clean energy stock that's starting to move to the upside. And in the after hours, we are seeing some movement there. Looks like some profit taking off the $11 mark, but definitely an upward movement. So yeah, heading into tomorrow, honestly, like I'm not really I'm definitely gonna do my research tonight. Of course, I'm gonna be posting charts and whatnot in the Pristine Capital trading room. And it's good every night. Do your scanning, make sure you're doing your homework, find any attractive setups that you're looking at. I always keep those in the back pocket just in case things go really well. But heading into tomorrow, I think I just want to chill out a little bit and see what happens, because we should not take this super lightly that we're getting a breakdown in treasuries and that this really good PPI report was sold into. So I want to just play it cool. I did raise some cash today, did a lot of selling, and maybe there will be some short opportunities. We don't really know. August tends to be very choppy, and my goal heading into August was like, let me just try not to lose money in August. And so far, August has been pretty fruitful. With that said, hope you all enjoy the rest of your evening. Thank you so much for watching this video. Make sure to click the like button and subscribe to the channel.